Hello again, everyone. This is Joe Henches with Beyond the Chart, your source for exceptional video analysis of stocks, ETFs, and indices so you can become a better trader. Welcome back. Today is Saturday, August 8th. We're going to take a look at the market the way we usually do on the weekend, and we're going to look at 5 solar-related stocks, 1 ETF, and 4 solar stocks today. So we're going to look at the Guggenheim Solar ETF, TAN. Then we're going to look at SolarCity, SunEdison, Canadian Solar, and SunPower. All right, let's start off here with the Dow. The Dow was down for the last 2 days since we talked on Wednesday. And so we're closed on Wednesday, 540, and so down about 170 or so points over the last 2 days, and it was down 46 points yesterday. So we've been down actually 7 days in a row. That's unique to the Dow, but the thing that's interesting is the Dow punched to a lower low here on the 27th, and we went to another lower low over the last 2 days. And so, clearly taking out the early July low. That's not the case with all of the indices. You can see it's kind of the opposite here with the S&P 500. Although it did break this trend line here, it would have been more negative, I think, if it would have closed below that trend line. But we'll see. I mean, it looks like it's starting to try to come down, but again, it has not taken out either of the 2 July low points here. The NASDAQ. This continues to play down and play out to the scenario of kind of a bearish reversal here, this broadening top. And, we got a doji bar in here, so I'm not quite sure what that means. I mean, it's indecision, it's a pause. It could just be a pause, or it could be some kind of short-term stop. We'll have to see. Right now, you got the 10 breaking below the 21. This has been, and I've talked about this, one of the strongest over the last few weeks, months. New York Composite, again, also hanging up above these 2 low points in July, and it's trending down over the last few days and last week, but not nearly as negative as Dow. Of course, Disney influenced the Dow, but you're always going to have something influencing something. Russell 2000, this is interesting, and I mentioned this on, I can't remember if I mentioned Wednesday night or not, but look again how the Dow and the Russell 2000 are the 2 indices that have taken out that early July low and have continued to punch to lower lows here, lower highs, lower lows, clearly downtrending. We're below the early May and the I think we got below the March. Let me take a quick look. Intraday we did. We didn't close below that low. We closed below the lowest close. So there's always something you can look at here. But it does look like it's breaking down fairly quickly. Let's take a look at the weekly charts. Now this one, the Dow, does look like it's really rolling over. I mean, this is the lowest close on the Dow since this week here, since January 30th. So we've closed below all of this, and it does look like it's kind of rounding over, although, I've still got this as a wedge count. S&P 500, little flatter. We've talked about this, how it seems like it's just, pushing, sideways, and has been doing that since, February. And this is why, look at this trading range. This is why there's been a lot of whipsaws back and forth, no continuation, etc. This tight trading range here on the S&P 500. The NASDAQ. Now, this thing is, it pulled back, broke down, bounced last week. Now we come back down and we're closing, basically reversing almost everything that we got back last week. So it's, closing down below the 10-week moving average again, but we don't have the moving averages crossed over. So, the NASDAQ is still slightly pushing up to the high side. New York Composite weekly, a little more negative. NASDAQ looks a little more like the Dow Industrials in terms of the damage that's been done and kind of rolling over on the weekly chart. Not only are we trading below the 10, but we've got the 10 below the 21-week moving average. So looking at the moving averages on a weekly basis, a lot weaker here. And then the last one is the Russell 2000, And there we go. And this isn't quite as weak on a weekly basis as the Dow and the New York Composite, but is definitely, you can see how it's now crossed and it's coming back down, and lowest close now. Oh, the point I wanted to make on this one is, remember how I talked about, look at this dotted line. Okay, so this is where resistance selling came in, selling came in, selling came in. Then we punched above it, and as it pulled down through that, buying came in. So, resistance becomes support, all right? Buying came in. Buying came in last week. That buying has petered out. We've now closed below that support line. And I look at that as pretty negative for the Russell 2000 in terms of the weekly close and the way this price action was here this last week. All right, let's take a look at the short-term trading index. Where are you? There we go. And this is not telling us anything new. It's been chopping in the middle. And the 10-week is 1.16. The VIX really popped yesterday, actually Thursday, and then it was up at one point, really pushing higher, and then look how it just reversed back down, because the Dow did cut some of its losses yesterday, even though it was down 46, and the VIX was down. The Dow was down a lot more than that at one point. And so we'll see. The thing I'm looking at here is this 21-day coming down kind of hard. So we're kind of counter trendish against that intermediate move. And so it makes me kind of wonder what's going on. We could have some sideways chop for a little while. The next one we'll take a look at is a high-low. All right, so the high-low has bounced back. Minus 171 for the day. So we had 171 more new lows than new highs for the day yesterday. And, again, we started coming down. It looked like we were going to come down here, and we just got a little bounce. And a little bigger bounce than these bounces that happened in here in this last move down. So we'll see what happens in here, too. Let's see. The next one is the McClellan oscillator. So I need to go back to the New York Composite. Let's go to this. McClellan's pulled back down negative, but again, we're up in this what I call the kind of the neutral zone. Okay, this is kind of getting toward the extreme up here, and this is getting to the extreme down here where you're oversold, overbought, and we're not in either one of those camps yet. So in terms of finding a bottom, selling off, we're not there. I mean, we got room to go to the downside. And the last thing I'll just mention is the put to call ratio is 0.71. 10-day equity put to call ratio is 0.71, so it's not at an extreme reading either on the put to call sentiment. All right, let's take a look at the high yield bond fund. Yeah, there it is. All right, this has continued to push down and has taken out this low from the 27th, last week's low. So pretty negative. We look at it on a weekly basis, and pretty solid downwick, taking out the low. This looked like it may have been some kind of reversal bar in here, and it's like nope. We took out the low. When you take out the low of a bullish looking bar like that, it's kind of negative, just like this candle right here. When we break that low, and it's like, here we go. And so I'm watching this, because look at this big reversal type candle that we had here. What week was this? December 19th. We take out this low, and I think that's extremely, extremely negative for continuation to the downside and the bonds and the high yield bonds, which is a sentiment for the whole the market, and I've talked about that. TLT continues to rally. That's the high yield. It's probably right in front of my face. Here we go. 20-year Treasury Bond ETF, TLT. So this has continued to rally in here, breaking above this resistance point that I identified and confirming the break of this trend line. And we'll see how much further this goes. This kind of is indicating that, the bonds are rallying, and bonds rallying meaning interest rates, long-term interest rates are continuing to drop here, and have been in a rally mode since June 26th. So that, to me, is an indication that the market is saying, well, long-term interest rates need to be dropping because, we don't see things as strong as everybody's talking about, or the Fed's looking to raise interest rates. And so you kind of wonder, now granted, it's short-term that the Fed's focused on, and these are long-term, but you just, you got to wonder what is really going on here with the economy. And the next one we're going to take a look at is the dollar index. And here we go. And the US dollar kind of reversed down on Friday. So, again, this has concerned me, the way this is acting. I would have thought with this wave, maybe this one, I would have thought we would have punched higher like this if this was really another fifth wave impulsive. And we're really meandering and we're kind of starting to chop. So I'm thinking that maybe we're doing still part of some kind of correction. That's why I called this a question mark 4 now, because this may not be done. And that's the struggle that you get into when you get into corrective waves. You just never really know how complex or how they're going to morph into something else, and that's just what you deal with. All right, let's look at oil. U.S. oil, United States oil. Here we go. Oil continues to punch down. Lower low, closing below the range of the prior day, 14.58. And on a weekly basis, how does that look? Pretty negative. And again, this is U.S. oil, and this is not an accurate reflection of where the futures pricing on oil was, because the futures pricing on oil was like the near month price of oil back in here was like $35. And I don't know whether it was in March or when it was, but it was $35 a barrel, and it's not down to that yet. But this picture is it's pretty negative. And let's see, the last one we'll take a look at is gold. All right, so this one has just chopping sideways, and again, still has not taken out this low here, 103.43 on GLD. So we'll see. That's what I'm watching for. And again, just like I said, when you take out a bullish-looking candle, you take out that bottom, it's pretty negative. All right, the next one, we'll take a look at our sector indicators, take a look at semiconductor. Okay, here's this SMH. Over the last, last Friday? Where is last Friday? Here. Okay, so we're down for the week in terms of chopping down. You can see the trend is still short-term, intermediate. The long-term has not turned. The 55's not gotten below the 233 yet. But this has turned down pretty quick and looks pretty negative. This potential support in here did not hold. And this gap fill back in here, I don't think it's completed yet. The high is 50.07 would be an accurate gap fill. We didn't quite get there. We got close. So we'll see whether that is enough or not. But the trend is still down. The next one is the home builders. Okay, so last week I talked about how this was flirting with this previous high right up in here and has formed resistance and sold this thing right on off. And very similar to what happened with these two peaks right here, exactly what's going on here. Now we'll see whether that holds. We've got a little inside bar inside this big move on Thursday down. And we don't have the moving averages rolled over yet, but we'll see. It may turn and try to rally up right now. You can just say that, the short-term trend is looking like it's turning down, especially if we take out Thursday's low. That'll be a continuation of what we're getting. The next one is the financial ETF. Okay, and I continue to question whether or not we're doing a broadening top in here. Sometimes on a broadening top, broadening top has 5 points. 1, 2, 3, 4, 5. Sometimes you get what they call 5A. That pulls up and it's one more rally to the line, and then it sells off. We'll see whether we get that or not. Right now, it looks like it's trying to. It's just kind of chopping sideways. And we're going to need to come down, take out this point if it's going to really continue down and test this low down here. This definitely still trading below this long-term trend line that we've got in place from October. So about 10, 11-month trend line, 10-month. All right, the next one we'll take a look at is IBB. NASDAQ Biotech got whacked the last couple of days. So, this breakdown below potential support, pulled back to it. Actually had a little fake out day on Wednesday, pulling above it. But again, not strong type candles, doji type bars. Let me look. You can see this. Actually 3 dojis, 4 really. You can count this as a doji on the 31st. 4 doji type bars in a row, and then we just slam right on down. And you've got the 10 below the 21. This looks like it's trying to break down, and we'll see what kind of continuation we get. The last one on this is the Energy XLE. Okay, here we go with XLE. The downtrend just continues and just rolling over. And it's going to be interesting to see, does this trading range actually get equaled? And it, because it broke down through it, and I commented on that, and I said, when you break down through a trading range like this, it has tendency to go the distance of the trading range down, and we're sure making an effort to do that. And this bar, this candlestick on Thursday, this bullish reversal type thing, now wasn't totally engulfing of the previous day's bar, but it was trying, but it's a bullish looking bar. And again, we take out the low here, that's going to be extremely negative. And I know I've said that a couple of times today, but I'm just trying to reinforce the point, just like back here on this candle on July 7th. When that low broke, the low 72.43, the next day 72.42, it was just by 1/100th. That's not enough to be significant. And then back over, a few days later, it does it and breaks on down through. And then what do? Is you get, increased selling as a result. And that's what's going to happen when this thing breaks down here too. All right, that's it. Let's take a look at TAN, Guggenheim Solar. Okay, this is Guggenheim Solar, TAN, TAN. All right, I had this looking kind of bullish. And when you looked at this TAN from a longer term perspective, this was a low back in 2012. All right. And this looked like a 5-wave move up. I've called it primary wave 1. Broke that strong trend line up here in corrective action. Thought we had a bottom here too, and again calling an intermediate wave 1, thinking we had one of the next primary wave 3 up. So that's when I'm still counting. But if we take out this point right here, this is the watch point, so I got a dotted line, then this scenario is out the window. Then this can't be 1 and a 2 and working a 3, because you can't go back beyond the beginning of wave 1 here. So this point is absolutely critical, and you're going to see this on several of the solar stocks too. So when you look at this, let me move this out of the way. This point is critical down here on TAN, the low 32.53. We break that, then we are still in corrective action of some kind, and we're just going to have to continue to watch the chop and the waves. And this will not be a wave 1. We'll have to try to re-identify what's happening. So we've got to look to see, does this start to get legs and turn in here? Let me take a look at some of the indicators. We are getting some bullish divergence on the RSI and the DI minus and on the demand index. So there's bullish divergence that's coming in here. Although this is actually, when I say that it is, but you got to look at the closes. There's really only been one close, and that's Friday's close, that's been lower than this one. And it does confirm, that all the indicators are confirming that initially, but you really need to see this turn up Again, you got to rely on price. You got to see this turn. You can't be jumping into here going, oh, well, the indicators, say there's a little bit of bullish divergence, so I should buy. Well, bullish divergence can disappear real quick. So you need to have price confirm the move. And so we'll see right now, and there's another possibility, another scenario. We could get this little reversal set up here because of closing below this point. So that could be an interesting thing. So, but again, the critical point right here is this pivot right down here. This needs to hold. All right, let's move on to SolarCity. SolarCity got whacked along with a couple others here the last 2 days, and I'm not quite sure if they just all went down in sympathy. I know one of them had earnings come out, and I'm not sure that if SolarCity did or not. I don't follow these on an earnings fundamental basis on these stocks. I follow them from a technical perspective, and every once in a while when something's happened, I will check. I didn't check on SolarCity, but it really came down. The fact that it broke this trend line, I posted yesterday in StockTwits. I said, this needs to hold, and then it didn't. And it just smashed right down through it. So I think that there's still corrective action going on of some kind here. It's hard to stay really bullish here when you see this kind of price action happen, and especially when you look at it over longer term. This is just absolutely messy. I mean, just look at the overlapping waves, just continuous overlap, and we're just seem like we're getting a continuation of that, especially since we're breaking down below this low right here. So right now, you just got to sit back and say, well, it's still correcting. We're just going to have to, see if we can get something to change on that. But right now, this is pretty negative. And the next thing I want to take a look at, next stock is Canadian Solar. There we go. Canadian Solar, this is, remember what we just looked at with Guggenheim Solar with TAN? This kind of looks like TAN in terms of what I was expecting to happen here. Thought we had this big primary wave 1 and a corrective action wave 2, and that we were starting up into a new, wave 1, 2, 3 kind of thing of a primary wave 3. Now, so this point needs to hold. And right now we're still in this short-term pullback. And we've pulled back. Let's take a look at how much we've retraced. See if I can do this without getting sometimes it grabs the Keltner channels. And it's close. There we go. All right, so look how deep it's gone already. It's retraced well over 61.8% of this entire move. And so it's getting deep. Now, again, a wave 2 can go very deep. And, it can legitimately go all the way down as long as it doesn't go below the low of the start of wave 1. Okay. Now, the other thing I'm noticing is this gap right here. It could be that this thing is going to continue to pull back until it fills that gap. That's just something to be aware of. And where is that point? That the bottom of the gap is at the high of this candle, 21.59, let's call it 21.60. So we'll see. I mean, that's, percentage-wise, pretty good little drop yet to go. But right now, you got to sit back and say, let me get rid of this. You got to look at this and say, well, it's still downtrending. Now, we've been pushing sideways here, but this is going to, you just got to watch the price action and see if this continues, if this starts to turn and push higher and get its legs underneath it. All right, the next one is SunPower. There we go. Usually I thought they were all together. Similar type situation in terms of the way it looks, not identical. And I don't have a wave count on SunPower. I haven't been really following SunPower, but I am going to start pulling this into some of the stocks that I'm following because this is pretty interesting. And 50-day moving average is 1.5 million shares. Not as active as I'd like to see it for trading options on, but still pretty volatile stock in terms of the way it's moving. Right now you just have to look at this and sit back and say, well, you got the 233-day long-term moving average trending down, and the 55 is now below it. The 21's below those, and the 10 just broke below the 21. So long-term, all the moving averages are aligned negative. You got this intermediate trend line broken here. We're rolling back over. And I think it's going to be a similar type scenario to what we just looked at with TAN and Canadian Solar. Is this low back here going to hold? And right now it's short-term intermediate looking kind of negative. All right, let's see. The next one we're going to take a look at is the last one is SunEdison. And boy, did this get killed. And this may have been influencing the rest of them. Here we go. Wow. Their earnings came out and the traders, investors just did not like this at all. It's just amazing what has happened to the stock since June 23rd, when it closed at $32 a share and closed yesterday at $14.50, so almost $15. So it's lost over 50% of its value in just about 6 weeks. Something like that. So this is just unbelievable how this just dropped off like this. Now, one thing I looked at is to say, okay, well, where could potential support come in? Well, this previous drop back here in October had a low of 1308, and then I identified, I looked at here and I said, well, this top and where previous support came in back in here, I drew this dotted line across and thought we might have some kind of a support zone in between 13 and 14. So we'll see if that holds and this can get its legs underneath it to bounce up. But boy, that's pretty tough hit that it took this last week and over the last couple of weeks. On a weekly basis, you can see, just a sharp pullback. Not a whole lot more to be able to tell, other than the fact that now it's pulling back, and we'll see what kind of support we get right in here. Long-term trend has been broken from this move from December 12th, clearly. Because you could draw a trend line. It's not hard to do that. You could take it across this low right here, and it's pretty clear that whole move from 2012, last 3 years, a little over 3 years, has now been broken. So anyway, that's the picture on SUNE, and we'll go from there. All right, this has been the weekend update. That's it for today. I'll be back tomorrow with the trade ideas update on trade ideas we've been in, and that's for subscribers only. So if you're not a subscriber, it's easy to do. First name and email, and you'll be good to go. And again, as I mentioned last week, I am moving to a membership type site over the next, probably in 2 to 3 weeks. We'll see. I'll have more details coming out as we go. Again, trying to provide more value and more help to subscribers. And that's the way we're going to do it and approach it. And I'll have more information coming on that. So, all right, everyone, have a great weekend. And we'll talk to you again on Sunday and on Monday.